We're bidding live on this S&P 500 contract. You can see that. Come off of that 12 bid.
I'm off.
All right, someone stayed at 12 with you. We created a contraction between the bid and ask here between 12 and 12.90, only 90 pennies wide. Prior to that, it was 11.40 by 12.90. We raised it up to 12. Someone followed us, so we're getting people to follow us in this market. That's the range. That's the close. That's the low print. And we just sold one contract right here, the one that we paid $12.10 for, at $12.80. So we created the last print, and we raised the bid in this side of the market on the S&P 500, because that's exactly what we have done. And not only that, it's all about people. The reason why the volume is lower is because people lack the skill of getting in here and creating these margins.
Alert, Google plus half.
And we've got the S&P contracting. It's broke below its half bar, and we still got executed over here at 12.80. Before, it's 12 by 12.90. It doesn't matter. Our entry was 12.10. That goes back here, one contract. We were creating an emotional response in price mathematical prints.
Alert, Google intraday percent at below 50.00.
And the S&P 500 is clearly, so he doesn't have a bid at $12. Someone is stuck there. We're going to bid this contract with this reversal, breaking below the S&P. I've got the S&P kind of weak here, everybody. And the thing about it is, it's at 3.6 is what I got. We're coming down. We broke below this half bar that I talked about, meaning that we've been below it. Okay? So 1137.68 comes into play. And we're printing on the S&P 1,138. The half bar in the SMF platform is 1137.68 ratio. And this live entry and live exits and making a market. And you're not even printing anything on the S&P, but look at the spread, $1.10. And somebody comes in at 12.20. And what MMTs are taught how to do, they're taught how to be market makers. That's totally a different operation between the bid and the ask with the public. And we've come down here. That's that right elbow gap on the S&P. That's that high on that S&P.
SPX above delta line 1135.66 at plus 1.
This low bar right here, this half bar right here is 1135 on the S&P. This last half bar. Okay? And right elbow gap down. So we're going to work with this one here for right now. But we do want to know that you had 1, 2, 3, 4, 5, 6 teenies. You had a $12 breakout and that teeny expansion at $2.02 per line. The SMF market maker platform has them. Whether it's high frequency volume machines or humans, doesn't matter. But we have it priced. And we have an IR here. And so trading the S&P 500 takes a lot of skill of understanding how to work that bid and that ask, understanding that, remember, what I'm seeing right here, the rest of the world is seeing it too, and we'll create those prints.
Alert, Google plus half.
That's how sophisticated we are, because we're making a market between the public, and sometimes you have to have the skill of knowing how to create a low or using a single contract to get a market going. You can really understanding where that pullback on the S&P and you know what happens at these half bars in the platform. This one here is 135.16. This one over here is 137.68. Okay, right here. And the S&P is trading above half of this total range, slightly, at a 1,138, and down here is 1,137.68. And when you pull back, you want to leverage up above the previous half bar, greater value, and this goes up to 35. 0.68 ratio equal 10.86 teenies equal 21.96 movement in the SMF market maker platform in the S&P. When the leadership in the S&P 500 was breaking out higher from the pre-market opening gap, from their original opening print ranges to their exhaustion highs, reversals that we talked about in pre-market, as you can clearly see the reversal, but you can clearly see the half bars holding and closing above. Let us not be in denial. Here's that half bar, 1137.68. And the S&P has got a bid here now at 1140. That's just that part. We only go by the actual prints that will come back into play. So you're leveraging up the bid. It's the first hour of the opening bell. What we will look for now is when they do come up MMTs is where they slide the bid, and eventually, if that is the case, they end up breaking their original right elbow gap open price of 1131. And remember where the half bars are. Here you're 1,139.89, 15.75 handles. But someone sold below the market and created that knee jerk. There was a knee jerk print in the time of sales. Nonetheless, this is staying elevated at this price level now in the $1,200 call. Someone's created a 1220 by 1340 bid and ask in the S&P. And how to maneuver this $1,200 call within a narrow price range of $4. So if I go down 1, 2 teenies, that equals $4.04 in the movement, which equates into the delta beta range between the bid and ask over here. So if I'm getting $4 up and $4 down, how much is this going to move between these ranges? But most importantly is how do I get the entry and then I become king on the exit? And they have to buy my price, just like we did. And working the bid and the ask is the right way of doing things when it's trading the S&P indexes. We'll come back and visit it. Right now we're approaching the first hourly trade. And that was the hourly first hour. We're almost there. 2 more minutes. And this is the big breakout, the reversal. Now that we've contracted from that opening gap, is how do we hold support and break higher highs is what you would want to see intraday to confirm that this would be a good bear trend volatility, upside bear market volatility, upside price volatility versus the downside price volatility. Is now that we have pulled back here, is what is that upside price action going to be? And it's all about what that gap is here at these price levels in this platform and how much you mathematically contracted versus mathematically ascending to the peak, and how tops get put in equities, everything that we talked about this morning about dealing with this, how the pullbacks are going to be diminished, and where you would build strength and break higher later in the day. I'm going to conclude exactly 59 minutes into the price action opening bell on the S&P intraday highs and the SMF platform, with the S&P at 15.38 handles right now. And there's the bid and the ask on the calls that we created the options in. We have another video that was done earlier that has clips, and that's very important because that was the initiation phase of what we did. And how you can make markets within what's going to happen on certain things. We'll conclude the hourly tape. It just now hit 1 hour. So we concluded as 1 hour, opening bell, price action, and how to trade the 1200 call on the index option with live entry happening then,
SPX
and a sell, and learning how to get the bid and be always a market maker to get the public to buy your asking price.